Hey there guys, how are you? It's John Madrid here with John Madrid's Factory Direct Homes. First and foremost, I'd like to appreciate you guys for tuning in, watching, sharing, commenting, and giving us an opportunity at the business, to help you and your family purchase your new home. So we cover a lot of different subjects. Some of the subjects that we cover are maybe questions that you guys have as a buyer and you're not sure how to ask the questions. So I've been doing this for over a decade. I like to come to you guys with answers to the most commonly asked questions for people like myself who are helping people like yourselves. Okay, so today's subject, what I'd like to discuss is being self-employed. Now, a lot of people think that because they're self-employed, they're not able to buy a house or qualify for a loan, and that's not particularly true. Now, there are some different aspects that do matter if you are self-employed. So I'm going to kind of go over these. Again, these are just overviews. These are for educational purposes. I'm not a lender, but I have dealt with lenders and I can give you some pretty good examples so that you can prepare yourself if you're in the market for a house and if you happen to be self-employed. This particular video is going to touch base to you. Okay, so if you're self-employed, right? So self-employed can mean a couple different things. I'm gonna just bring up the two most common. If you're self-employed, you may own your own company and have your LLC or your DBA or all these different things. Let's just put that in one category, okay? That is one type of self-employed. And again, there's a lot of different types of self-employed, but right now I'm gonna just keep it simple. Either you own your own company, you have your LLC, your DBA set up, all that good stuff. And then let me give you the one other example. Let's say that you're self-employed, but you don't have the LLC, the DBA, but you get a 1099. Now that most people have heard of, right? Because it's the most common. So most of the people, whenever they come to purchase, they don't even say, hey, I'm self-employed. They just say I'm W-2 or 1099. So typically 1099 means you're self-employed. At least in the eyes of the bank and the IRS, you're going to be considered or classified as self-employed. So what does 1099 mean, right? Like, what is that? Okay, or what is W-2? Which I'll make a whole nother video about that. But for the time being, we're talking about self-employment. So 1099 being the most common. And keep in mind that even if you own your own company, you're also 1099, right? So let's just kind of go, okay, company, DBA, LLC, just 1099. Regardless, both of them are going to be considered 1099. So we're going to use this video for self-employment as an explanation of what 1099 is and how to ensure that you're setting yourself up for success when the time comes to purchase. Okay. So 1099 essentially means that when you get paid, let's say that, this week your pay is $1,000, they give you either a check or a direct deposit for $1,000. Now you might think to yourself, well, obviously, well, no. Like if you're a W-2, depending on how you fill out all your tax paperwork, let's say your same check is $1,000, just for simplicity purposes, I'm gonna say that they charge 20% tax. You take home $800. The 1099 takes home $1,000, but he still owes taxes on that $1,000, right? So here's where things get complicated. And again, I'm not a CPA or a tax expert or a lender, but I do have a lot of experience in this field. Now, everybody, for the most part, if you're old enough or in the market to buy a house, you've filed taxes before, right? All right. So in the taxes, you're going to have a lot of different pages. There's going to be like stacks of pages in there. In reality, the main things that you need in there, if you're 1099, you're gonna need your 1040s. Typically, that's just the first two pages. It'll say 1040 EZ, or depending on what state you're in, it might say a little bit different, but essentially the 1040 is where all of the financial information is put into, and then it'll show your gross income, your taxes, and your taxable income, okay? Now, if you're self-employed, they're also going to ask you for your Schedule Cs. Now, your Schedule Cs are going to be where all of your 1099 income, whether it was just from one person or 100 people, is put into, and that's where you calculated your gross, your expenses, if you had like fuel, clothing, entertainment, whatever it is that you're writing off, and then that data is also input into the 1040s, right? So again, just to kind of give you some perspective, again, try to keep these videos short but informative where they make sense. I'll give you a couple of examples. Let's say that you're a 1099 and you gross. In other words, you bring in $1 million, but you write off $999,000 because everybody's told you write everything off so you don't have to pay taxes. Well, the problem is when you go to do a loan, the bank's not going to look at the million. They're going to look at the $1,000 that you claim that you made. And there's a lot of people that also claim they lost money, which really doesn't make sense, right? Because if you're in business, you're not in business to lose money. You're in business to make money, take care of your family, help, buy yourself a house, things like that. So the key points here is you can buy if you're self-employed or if you're 1099. The most important thing to remember, okay, and again, I'm not a tax expert here or a lender, but I do have a lot of experience here, is to try to write off the bare minimum. It sounds crazy, but you actually want to pay as much tax as possible. Now, take your standard deductions just like a W-2 person would, but you want to make sure to show your income, your net profit. Not the gross is great, but the net, you want it to be as high as possible because that's the number they're going to use to consider to see if you can budget for a loan. And if you just became self-employed, most lenders, again, this stuff could be changing daily, they're going to want 2 years of tax returns. And that means the last 2 years, that net income, they're going to want to see that high enough because that's what they're going to determine your debt to income ratio. Now, if you're not sure what a debt to income ratio is, check out the page below. We actually shot a video on debt to income and it goes a little bit more into depth, okay? So the purpose of this video today was, number one, to tell you guys if you're self-employed or 1099, you can buy. Pick up the phone, call, text, email us, or just go ahead and apply on the link provided in this video and we'll figure out how much you qualify for, okay? So again, thanks so much for watching this video today. My name's John Madrid. I look forward to helping you and your family get a new house. So remember, call, text, and email us today. Thanks again, guys.